Okay, let's dive right into a topic that's generating a ton of buzz and, well, according to some recent analysis, a whole lot of risk: artificial intelligence. There is a massive wave of money pouring into it, and some folks are starting to get pretty worried it's creating a bubble. And that really brings us to the big question we're looking at today. Is all this excitement, all this money, creating an economic bubble that's, on the verge of popping? Some financial experts are really starting to sound the alarm, and today we're going to break down exactly why. I mean, wow, it really doesn't get much clearer than that, does it? This is a pretty stark warning from a financial analyst, and it really captures this growing feeling of unease in the market. For some people, an AI bubble isn't just a possibility, it's a certainty. Now, we've all heard the long-term worries about AI, right? Things like job replacement or its huge thirst for energy. But the material we're looking at today points to a much more immediate threat: the way this flood of money into AI might be inflating the entire stock market and, by extension, the whole economy. To really get a handle on what might be happening, we kind of need to look back. History is just full of these moments of speculative frenzy. Think about the dot-com bubble in the late 90s or the 2008 housing crisis. These big events followed a pattern that might be repeating itself right now. So, what is an economic bubble anyway? It's actually pretty simple. It's when the price of something, an asset, just skyrockets because of hype and speculation, not because of its actual real world value. People are buying it simply because everyone else is, driving the price way, way beyond what it's actually worth. And these bubbles, they tend to follow a pretty predictable four-stage life cycle. It always starts with excitement as the early investors see prices go up. Then more people start borrowing money to get in on the action, which just fuels the fire. This leads to this period of massive overinvestment. But eventually, the hype just can't sustain the price. The insiders, they see the writing on the wall, and they sell. And then, pop, the bubble bursts, leaving a lot of people holding the bag. Okay, so with that classic pattern in mind, let's take a look at how it applies to the AI industry today. The parallels, as laid out in the source material, are, well, they're pretty striking. There's this really stark disconnect between the perception and the reality in AI right now. On one hand, you see these soaring market valuations and headlines about trillions of dollars in deals. But if you look behind the scenes, a lot of the biggest names in AI are actually losing billions a year and taking on huge amounts of debt just to keep the lights on. This number right here is an absolute showstopper. A report from MIT found that a staggering 95% of companies that have adopted AI tools are not yet seeing any financial returns from them. 95%. Let that sink in. That suggests a huge gap between the promised value and the actual tangible result. And hey, even tech insiders like Jeff Bezos admit that in the middle of all this excitement, it's really hard to tell which companies are going to be the real game changers and which ones are just hype. When it feels like every single idea is getting funded, that's a classic sign that speculation is starting to outpace sound investment strategy. Okay, so a few companies might be overvalued. Why does that matter to the rest of us, right? Well, because according to this analysis, the AI boom isn't just a story about one sector, it's become the story for the entire US economy. This really puts the scale of the issue into perspective. According to one estimate cited in the source, investments in AI-related infrastructure, think data centers, have accounted for 92% of all U.S. GDP growth so far this year. Just think about that. That means pretty much the entire economic expansion is balanced on this one very speculative sector. So this incredible concentration of growth has made tech billionaires even richer, for sure. But it raises a really critical question. What does this mean for everybody else? Is the public benefiting from this, or are we the ones footing the bill? And here's where it gets personal. The source points out that taxpayers are already subsidizing this boom through massive tax breaks for data centers, not to mention rising electricity bills and the serious strain on local water supplies. These are real costs that are being felt in communities right now. So this brings us to the most crucial part of the whole discussion. If this really is a bubble, and if that bubble bursts, what happens next? The potential fallout could extend far, far beyond Silicon Valley. And look, the crucial point here isn't about which investors win or lose. The analysis is most concerned with the working families who are already struggling in an economy where essentials like housing and healthcare are just getting further and further out of reach. They are the most vulnerable if things go south. The potential consequences are really severe. A burst bubble could trigger widespread job losses, wipe out people's savings, and potentially tip the economy into another major recession. And then comes the big one, the possibility of another massive government bailout, paid for, of course, by taxpayers. And this is really the concluding thought from the source material. The message is pretty clear. While innovation is vital, we can't let one industry's speculative boom put our entire economic system at risk. The future of AI isn't just some inevitable thing. There's still time to shape it responsibly. And that leaves us with this final, really provocative question. We saw huge bailouts back in 2008. So, if the AI industry comes crashing down, should the public be asked to foot the bill to save it? It's a question that is absolutely worth thinking about. Hey, if you found this breakdown of the AI bubble helpful, make sure to subscribe to Refreshing Tech for more explainers that cut through the hype. Thanks so much for watching.